Welcome back. Well, for the markets, it's holding up at this point in time for the mid-cap. So the mid-cap index is up around 0.5%. We do have one bank which is on our radar. South Indian Bank, in fact, is doing well. That stock is up around 4.5% post its numbers. Asset quality has improved as the gross NPAs declined on a Q-on-Q basis, and so have the slippages. To discuss more about the earnings and the quarter gone by, we have with us Mr. Seshadri, who's the MD and CEO of South Indian Bank, who's with us now. Hi, sir. Thank you very much for joining in. So let's start with that positive piece of information where your slippages, we do understand, have reduced on a sequential basis. Give us the absolute figure in terms of slippages this quarter. I think it came in at around 213 crores versus, say, around 300 crores in the previous quarter. What led to the lower slippages and what was recovery like in terms of this quarter gone by?
Slippages were the lowest that I can remember. Our slippages came in at 206 crores for the quarter, which is 24 basis points. And if you annualize it, we dropped below 100 basis points for the year. Recoveries were north of 500 crores, so there was significantly higher quantum of recoveries than there were slippages, which therefore helped our financial outcomes very significantly.
Right. You did say that FY25, the last time you joined us, will see advances of between 10 to 12%, 10 to 11%. That actually is something that you've missed mildly, if you must. 9.8% has been your advances growth in the previous quarter. Wanted to know what your target for this year is when it comes to loan growth, advances growth, and what are you targeting in terms of spreads and NIMs?
Okay. Actually, last year we were telling, our stated objective was to get a 10% advance growth. And the finalized numbers show approximately 9% growth, but that's after a 900 crore charge-off.
Right.
A write-off of 900 crores. So if you take that into account, we have hit the 10% number that we stated earlier. This time around, we want to be north of 12% advance growth. Deposit growth, again, to be north of 10, 11%. On the NIMS front, I'm a little hesitant to give a number right now because of the situation where the cost of funds are dropping far slower than the other side of the balance sheet. And therefore, it's an area of active management from our point of view. But we are reasonably confident that the profit momentum that we've shown will continue to be present, at least for in the foreseeable future.
So when you say uncertain for NIMs, what exactly is it that you mean? Is it uncertain to see an expansion on NIMs, or do you believe that you don't have a bottom when it comes to, the NIMs compressing? Or would you just about maintain NIMs at these levels? I'm just trying to understand what this uncertainty entails.
The NIMs will actually shrink.
Yes.
The shrinkage is something that we are studying. As of this moment, we don't have a view as to how much it will. The advantage that we do have is that a very large portion of our book is very short tenor assets. So we tend to do a lot of corporate business, which is 30-day money and 60-day money and so on and so forth, which we should be able to reprice. Approximately 40% of our book is linked to external references like repo and T-bill and so on and so forth. The rest is not. So at this juncture, we think that we should be able to manage NIMs. There will be compression. The exact quantum of compression is something that I'm hesitant to put a number on.
So are you saying that you can maintain this maybe 3% mark, at least in terms of net interest margins? You closed FY25 with around 3.21%. Where does that go from here? Is it just a few basis points in terms of compression that we're seeing?
I would think that a 10, 12 basis point compression is something that we should see, but we are doing our best to manage it and have the outcomes reversed. So if you see Q4 results, our NIMs actually grew 2 basis points. So from Q3 to Q4, we grew 2 basis points.
Okay.
So as of this moment, I'm a little hesitant to give that number, but the trend is that it's going to be, the NIM will be under pressure.
But are you seeing that kind of hesitance or when it comes to the asset quality guidance as well? Because you did 206 crores in terms of slippages, your recoveries were north of 400 crores. Those were two excellent parameters for you this quarter. But are you going to sustain that kind of performance in the coming quarters?
So we think that our asset quality, across every measure on asset quality, we've done very well over the year. Our SMA2 number came in at 30 basis points at the end of Q4. So we are feeling very comfortable from an asset perspective at this point in time. And we think that the total NPA accretion that we will have will be substantially lower than what we had this year. So we are very comfortable there. The NIM is an area of some concern, which we are dealing with.
Would you be comfortable giving us a ratio that you're targeting for both your GNPAs and NNPAs?
The GNPA as of this moment is 3.2, and the net NPA is 0.92 as of this moment. So I don't want to, I'm a little hesitant to talk about future technical.
Got it. The other thing that stood out on your numbers, in fact, the primary, positive, apart from the other things that we saw, was the big jump that we saw in your operating profitability. Your cost-to-income ratio saw a sharp dip, just above 52%. Where does that number settle at?
Here, our cost to income is about 57%. We've been very disciplined on the cost front. So I think we are one of the institutions on the street that have managed costs very well this year. We were very candid with the street as well that cost to income is a ratio that we want to attack. So we actually went very slow on hiring. We cut back on branch growth. In fact, we consolidated branches a little bit, and we focused on productivity increase in all the branches that we did have. And that led us to a year-on-year decrease in cost to the extent of 431 basis points on a cost-to-income ratio perspective. We think that trend line will continue. We'll take out another 200, 250 basis points more during this year. And at that point in time, we will be reasonably cost competitive. So we started off having significantly higher costs than our peers. And that is something that we would have corrected by the end of this year.
So would you have a target on ROEs and ROAs? Because you're hesitant on NIMs and GNPA and NNPA. With the cost-to-income ratio coming down by about 200, 250 basis points, that would mean better profitability. Do you have a target here?
Yes, our profits for the quarter was about 110 basis points, and for the full year was at 105 basis points return on assets. In the early part of the year, we think that we would be near about the 100 basis points mark. Latter parts of the year, we want to get to about 115 basis points or thereabouts. So if you were to average that out, you'll get the actual number.
Okay. Just before we let you go, just wanted your entire outlook on the MSME loan space. You also, I think your book is, over 9,000 odd crores. Just give us a sense in terms of how exactly that book is doing when it comes to asset quality, and what is the growth that you're projecting within MSME and the SME space.
So this is the year where we step on growth. Last year we did 10% growth. This year we'll do 12 plus. Majority of our growth will come from MSME and retail. In fact, the proportion of the corporate book will actually decline through the year. We think that the MSME piece, we should be in a position to grow 20+%. The portfolio is doing quite well. We did have strains in the past. Those have all washed through the balance sheet. We have a clean book at this point in time, and we have now new underwriting tools, which we think will hold us in good stead as we go forward.
Okay, all right. So we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's the management of South Indian Bank. As you can see, the stock has actually moved up higher. It's up around 6.5%. So maybe the street likes the commentary coming in from the management at this point in time. We'll take a short break, but here is some good news for our viewers. India Business News Leader is now just a click away, introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at just your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screen.